Hey guys, thanks for joining. We're going to be going over trust accounting rules. A lot of people are taking trust money and they have no idea what the rules are. I got them behind me, and here in my hand there's a whole sheet of paper for doctors to follow, specifically chiropractors, when they receive trust money. So first, the provisions of this rule apply to trust funds, and they define trust funds as unearned fees, okay? Unearned fees in the form of cash or property. So if anybody here ever watched Daredevil from Marvel, he was a lawyer, he was blind, he would have his clients pay him with gifts because he helped a lot of the lower income people in the neighborhood in Hell's Kitchen, for those of you who like Daredevil. So the movie. So anyways, trust funds include property and cash, okay? So also, and these are not the fun type of trust funds, and you'll find out why. It's received by the chiropractor prior to rendering it says his services. That's the law. They need to update that. It says his services. I guess this rule doesn't apply to female chiropractors, but has services or his selling of goods and appliances. Now, these are the minimum record-keeping requirements for trust account records. And so you have to have a separate bank account, which I know most of you don't have. You have to keep a journal with receipts, deposits, and checks. You have to have a ledger. If you have QuickBooks, that would be sufficient, but you need to have a separate ledger just for money in, money out. Patient John Smith gave me $100, whatever. Okay, so if you're selling a package of 20 treatment plans for $2,000, you need to have this if you get the money up front, okay? Reconciliation quarterly. You have to reconcile it quarterly and say, oh, here's what I'm owed. Here's what this patient has left in visits or whatever, okay? Then you have to maintain all of this stuff for 6 freaking years. And if that doesn't scare you from taking trust money as a chiropractor, between June 1st and August 15th of every year, you have to send in a letter to the Department of Health stating, I certify that I have read the provisions of Florida statute, blah, 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 and this administrative rule, and I am in substantial compliance with the minimum requirements as to trust accounting records and procedures, okay? And then you have to sign it as the chiropractor. So these trust account rules for chiropractors is a lot of extra work. I personally don't think it's worth the headache for you to take the trust money up front. Maybe that's your business and your livelihood. If you're gonna do that, you need to have all of these, because if you don't, that one patient who complains and says, oh, I paid for 20 visits, I only used 10, I want half my money back, and you don't want to give him back half his money, that's when you're going to have problems, okay? So keep that in mind. Always take a look at these rules. If you take trust account money, okay, if you just do personal injury cases, if you do health insurance, you don't take a lot of cash, you don't cash in advance of treatment, okay, and you don't sell packages, okay, then don't worry about this rule. But if you do take cash up front for services not yet earned, this is the administrative rule 64 B2-14.001, very specific, okay? Thank you for joining. Have a great day.